Hello, my name's Dominic Fonte. I'm your Cutler real estate agent here for Stark County and the surrounding areas. Today I'd like to bring you up to speed on the last 12 months of what's happening in our neck of the woods, which is Stark County and the surrounding areas. Now we're right up on Thanksgiving, so I wanted to wish you happy Thanksgiving to you and your family and loved ones. And now I'd like to go into my presentation. So here's what I'd like to do. This graph represents a mountain of activity pertaining to the inventory of homes that we had. Now, if you remember 2007 to 2011, this is starting at 2011. So we had a mountain of inventory. Then in 2012, 13, 14, and 15, you could see the inventory was like a ski slope, went on down. What that means is we have less supply. The demand has maintained a very healthy strength over the last couple of years. So that means that the interest rates are lower, so the demand's high, inventory's low. That creates a very healthy market. What I mean by that is the absorption rate. You can see if you look at the last 12 months, we've been averaging somewhere between 4 and 5.5 months of inventory. So that means that if you have product on the market, homes for sale, and buyers looking to buy, it takes about 5 to 5.5 months to use up the inventory. Now, when we were looking at that mountain of inventory, that was 11 to 12 months inventory, and that's why the prices plummeted. Now you're seeing a very strong, healthy market. Now here we are looking at this. This represents days on market. Orange represents 2015, and the green is 2014. So you can see a spike in 2015 for the days on market. That just means that if your house went on the market today, how long would it typically take before it's sold? The spike on 2015 represents that almost 50% of the homes on the market today go under contract within the first 30 days. Keep in mind, though, that it has to do with price, the location, and the condition. If those three items are in sync, then you're pretty much guaranteed that you're going to sell it pretty quick, probably within the first 30 days. The next graph that I want to show you is pretty much year-to-date inventory from 2014 and 2015. You can see a slight increase in how many homes sold last year versus this year. So we've had 3,352 home sales, which is about 150 home increase over the prior year. So you can see that homes are definitely selling. That's quite a few for Stark County. This next graph represents, okay, how are they buying these homes? Are they paying cash? Are the veterans buying these homes with the VA loans? Are they buying them with what's called FHA, for Housing Authority, or cash conventional? So there's various ways on how people finance or pay cash for a home, and you're going to see right here an increase, a 17% increase in financing, which is FHA. Now FHA is a lower down payment product because a lot of the first-time buyers tend to use that because it's only 3.5% down payment. The difference is there's a lot more regulations now, so I don't believe we're going into any kind of bumble soon. The criteria is pretty strict for people to buy homes nowadays. So you have to have good credit, you've got to have a job, you've got to have credentials. Now they can buy with 3.5% down, so that's why there's an increase in FHA, because people are taking advantage of the lower interest rates. Also, there was just a slight decrease in cash transactions, which is because probably the inventories are lower. There's not as many damaged homes out on the market, which would be foreclosures or short sales. Now, as you look through the rest of this, you can see there's also an increase of conventional loans. And I think you're going to continue to see that. Now, over here, 2014 to 2015, you can see that there's a 3% increase in the value of your home. So in other words, supply and demand shifted. There's a lot more demand than supply. Therefore, the prices are forging up some, which is recovering from the past several years when we had a downturn in the market. So we got a 3% increase in October, which tells me even if you think the fall is a bad time or the winter's a bad time, it's still a great time to put your house on the market because the demand is still high and there's less inventory. So it's a perfect time to do it if you're thinking about it. Now the last graph is talking about the fortune telling. And the fortune telling is really when you look at Freddie Mac, Fannie Mae, Ginnie Mae, and National Association of Realtors, as well as the Mortgage Broker Association, they're predicting in the next 4 quarters, 2016, what the rates are going to do. Now, you know the Fed's been talking about it for a couple of years now, that they want to make a change in the interest rates. But every time they do, guess what? The stock market goes, poof. So I think what's going to happen is you're going to start seeing some increases. But they're predicting, at least, Freddie Mac, Fannie Mae, Mortgage Broker Association, and National Association of Realtors, that by the first quarter next year, which is just right around the corner, they're figuring the rates are going to be about 4.08. Currently, they're 3.5 to 4, depending on credit and other variables. The second quarter, they're predicting 4.25. Third quarter, 4.43. And then this time next year, 4.63. So if this is true, maybe seriously consider that this data I shared with you, if you can wrap your arms and head around it, maybe make a decision if it's the time for you. If you have questions, just go to DominicFonte.com, send me an email. You could surely call me at 330-418-1535, or you can Google me, Dominic Fonte, or go to my website. I have a lot of good data there, which is DominicFonte.com. That's www.DominicFonte.com. Hope this video finds you well, and have a happy holiday season and happy Thanksgiving. Thanks for listening.